Reminiscences of a Stock Operator by Edwin Lefevre. Our story begins with a young Larry Livingston, barely a teenager, stepping into the heart of the financial Wild West, a bucket shop. Bucket shops were back-alley operations notorious for manipulative practices. History estimates there were over 4,000 of these unregulated brokerages across the United States by the early 1900s. They thrived on commissions, essentially taking bets on stock prices without ever actually buying or selling shares. This meant bucket shops profited win or lose, regardless of the customer's outcome. Excited and new to the scene, Larry joins a group of experienced traders, placing bets on stock prices based on quotes displayed on a board. These quotes, often unreliable and manipulated by the bucket shop itself, fueled a speculative frenzy. This baptism by fire in the bucket shop wasn't a traditional education, but it was an education nonetheless. Larry learned about market volatility, the power of emotions in trading decisions, and the importance of quick thinking in a fast-paced environment. These early experiences, though unconventional, would become the foundation for his future success. Here are 5 pivotal quotes from the book Reminiscences of a Stock Operator that capture lessons learned by Larry throughout his career journey. 1. Men who can control their emotions when the whole world is going crazy around them are the only ones who will truly prosper over a lifetime. This quote emphasizes the importance of emotional control in navigating the unpredictable world of trading. In Reminiscences of a Stock Operator, we see this principle illustrated through the experiences of Larry Livingston, who learns the hard way about the consequences of letting emotions dictate his decisions. For example, during times of market volatility, such as the panic of 1907, those who remained calm and rational were better positioned to capitalize on opportunities, while others succumbed to fear and made impulsive decisions. Statistics show that investors who maintain emotional discipline tend to outperform those who allow emotions to drive their actions. The average investor underperforms the market significantly over the long term due to emotional reactions to market fluctuations. This highlights the significance of emotional resilience in achieving success in the stock market over a lifetime. 2. Losses never bother me after I take them. I forget them overnight, but being wrong, not taking the loss, that is what does damage to the pocketbook and to the soul. In Reminiscences of a Stock Operator, Larry Livingston faces numerous instances where he must confront losses head-on. For instance, after making a losing trade based on faulty information or a misjudgment of market conditions, Larry doesn't fixate on the setback. Instead, he quickly accepts the loss, learns from his mistake, and moves forward with a clear mind. One example is when Larry takes a significant loss of $10,000 on a trade due to a sudden market downturn. Rather than allowing the loss to consume him, he promptly sells his position to limit further damage to his portfolio. This ability to cut his losses and move on allows Larry to maintain his focus and confidence in future trading decisions. By adopting this mindset, Larry protects himself from experiencing prolonged financial losses and emotional distress. His willingness to accept losses as a natural part of trading enables him to bounce back stronger and wiser, ultimately contributing to his long-term success in the stock market. 3. The successful trader has to be flexible and adaptable. He has to move with the market, not against it. Larry's early experiences in volatile bucket shops highlight the need for flexibility, while the cautionary tale of the 1907 crash underscores the dangers of inflexibility. Larry Livingston observes how Mr. Partridge, a seasoned trader, demonstrates adaptability by promptly adjusting his positions in response to market movements. During a bullish market, Mr. Partridge capitalizes on rising stock prices, but swiftly shifts his strategy when market sentiment changes. In one instance, Mr. Partridge buys 1,000 shares of Union Pacific Railroad at $80 per share, anticipating further price increases. However, when the market unexpectedly turns bearish, he sells his shares at $78, limiting his losses to $2 per share. This showcases Mr. Partridge's ability to adapt to evolving market conditions and mitigate potential losses by adjusting his positions promptly. Similarly, Larry learns from his own experiences the importance of flexibility in trading. These examples underscore the significance of moving with the trend and adapting strategies accordingly for successful trading outcomes. 4. The public wants to know which way the market is going to go. Nobody knows. If they did, we would all be millionaires. Reminiscences of a Stock Operator delivers a dose of reality with this quote. This isn't just Larry Livingston's, Jesse Livermore's alias opinion. It's a core market principle. The book itself chronicles Larry's struggles. Despite his undeniable talent, he experiences both windfalls and crushing defeats. In 1907, recognizing market weakness, Larry shorted stocks and amassed a significant profit, estimated in the book at around $3 million. Yet his inability to predict the exact bottom and the subsequent rebound led him to cling to his short positions for too long, ultimately incurring significant losses. This experience underlines the inherent unpredictability of the market. Reminiscences emphasizes that the market is a complex system influenced by countless, often unforeseen factors. The book's message isn't one of hopelessness. It's a call for a different approach. Instead of chasing elusive predictions, Larry, through his mentor, Old Turkey Platt, emphasizes discipline, risk management, and identifying high-probability trading opportunities. By focusing on process over prediction, investors can increase their chances of long-term success. Before we proceed to Larry's next lesson, if you're finding this content valuable, please give this video a like and consider subscribing for more insights on business, finance, and investing. Thank you. 5. I never attempt to make money on a stock I don't know. I never buy a stock tip. In the chaotic setting of a bucket shop, young Larry could have easily succumbed to the allure of stock tips and rumors. However, even in his youth, he prioritized research. Focusing on cotton futures, a market he understood, he meticulously analyzed data and price movements, laying the foundation for his early wins. Later in his career, Larry's rejection of a sure-thing tip exemplifies the risks of blind trust. Despite the potential for a $1 million payout, he declined the offer, wary of unverified claims. While the stock did surge afterward, Larry's commitment to thorough research prevented him from making a reckless decision based solely on a tip. Real-world statistics reveal that a staggering 80% of stock tips result in losses. Reminiscences emphasizes the importance of independent research and skepticism toward tips. By understanding a company's fundamentals, market trends, and factors influencing stock prices, investors can make informed choices and avoid the pitfalls of impulsive actions driven by hearsay. As we wrap up our journey through Reminiscences of a Stock Operator, we can't help but admire Larry Livingston's incredible skills in the stock market. Known as Jesse Livermore in real life, he was truly a master trader, able to predict market trends and make smart decisions that led to huge profits. The book also shows the dark side of gambling on stocks. Larry sometimes got too sure of himself, forgot to be careful, and even listened to bad advice. These mistakes cost him dearly throughout his career. Despite his undeniable talent and flashes of brilliance, Larry ends up losing everything. The guy who once ruled the market was brought down by his own missteps. This is a powerful reminder. The stock market can be a tough teacher, even for the smartest players. Larry's story isn't just about his wins. It's a warning sign. You need more than just talent to win in the long run. Skill, discipline, and a healthy dose of doubt are the keys to success. But even with all that, the market can still be unpredictable. Larry's journey teaches us to keep going and bounce back, even when things go terribly wrong. By learning from his ups and downs, investors can gain valuable knowledge for navigating the wild world of trading. Thank you for watching this video through to the end.